Ladies and gentlemen, fellow traders, good to see you again. Well, I can't see you, you can see me, but welcome to the show. Lovely to have you back on board again. Keeping it simple is what it's all about today. Most traders lose money because they make things too complicated. So today I'm going to talk about how to keep it simple and how to really get rid of all that complicated stuff that we talk about on a regular basis. Today, it's all about keeping it simple. I better move my little picture out of the way so that we can actually see some of the charts. So we can actually get on with looking at some of the charts there. Now you can actually see the charts. What I did want to show you today is something really interesting, and I hope you're all well. I hope you're all here. But something I found really interesting is if you look at this profile here, look at this. This is all the indexes. Now, all of these indexes look almost exactly the same. So that's the S&P 500 on the left. And then you've got the US 30, the Dow in the middle, and you've got the Germany, the DAX on the right. So you would think that Germany would look slightly different. Look at this, exactly the same movement to the T almost. You know, the picture looks almost the same. And that's what the indexes are following, because at the moment, the indexes are following the volatility in the market. They're following the fundamentals in the market, everything that's happening in the markets as we stand at the moment. And that's what's making all the difference. So let's go back onto the normal. It's just going to take a time to get all the charts back again. There we go. Now look at the S&P 500. It's actually bounced again this morning, starting to go back up. And the earlier news was that, you know, indexes sink as oil goes up. Now, interestingly enough, if you look at oil, oil is also sort of losing steam here, very similar to what the S&P 500 is doing. So you're going to see a lot of this volatility while there's a lot going on in the world. And what I said before and what I said last week and what I've been saying in the members videos as well is, if you look at it, I find it insane and strange that so many traders have this thing where they, let me just turn that off so that it doesn't make a noise again. So many traders have this thing where they effectively just keep on trading. They keep on believing that things are going to just go hunky-dory, that everything's just fine. But you don't know that everything's just fine. You can't predict the future. You can't be 100% sure that everything's going to go in your favor. So what you're doing is you're assuming something, and you must never assume anything in the markets. So it's actually crazy to think that back in 2008, very much a similar thing happened where nobody really believed what was happening around them. And I believe this is a situation of so many traders are only in the market for maybe 2 or 3 years. There's not many traders like myself around that have been around for many years. Most traders that you find in the market are up to 5 years in general. And those types of traders effectively haven't really seen a crash, because in what I did my research, and I found that most big corrections or crashes happen every 10 years. And when you look at that perspective, the traders that have only been around for a couple of years, if you got in during a crash, then obviously you're good. But if you got in after that, then you haven't seen a crash and you haven't really come around it, or a disaster or something happening in the market. And this is where a lot of traders go wrong, I think, because they don't see it. Interesting, just a thought, you know, it's just something that came off the top of my head more than anything else. Then, you know, just thinking about it, why do traders not see the problems coming? Why do traders not see the oncoming train and just ignore it like it's not there and just keep on buying? And not just retail traders like you and me, actual institutional traders, big money traders that just don't see that oncoming train. And I really do believe it's because they haven't been there when things went pear-shaped. So hello, yeah, how's it, guys? Hi, everyone. Can you talk about how certain strategies can only work with certain market regimes, trending, ranging, etc.? Therefore, can you talk about the importance of understanding what the market regime is? We'll sort of put it in perspective, but you know, your comment is actually very interesting, because you're talking about how you talk about how certain strategies can only work with certain market regimes, trending, ranging, etc. So what we're doing, we're going back into the realms of complicating things. And today's entire show is about keeping it simple, keeping it incredibly simple, making it stupid easy so that anyone can do it, so that anyone can understand it. You don't have to be a genius to understand charts or a system. The most difficult part about your trading is going to be the strategy that we use, the strategy that we use on a regular basis. And you all know my strategy. We'll go over it again, just in case you don't, because as you said last time, there's nothing wrong with going over it again so that everybody's clear on what to do and how to do it and how to manage your risk. The charting systems are there for you to manage your trade. That's all they're there for. They're there so that you can take a trade and you can manage it. You can manage your risk, and then you can impose your business plan onto that system. So what I do is I make charting so simple that a primary school child could do it. We make it stupid easy so that it's not difficult to trade, so that it's incredibly easy to trade. So look at this US dollar Japanese yen trade that we were looking at this morning. Why were we looking at this US dollar Japanese trade? Who can tell me? I'm sure all of you can actually tell me why we're looking at this US dollar Japanese yen trade. And that is because, firstly, it's hit resistance. And you've all heard me say over and over again, many times in the markets, that in my opinion, the US dollar Japanese yen, that the Japanese government does not like the Japanese yen to go over 150, let alone 160. And I don't think they want to see it go to 170. Now, I know there are some unusual events happening in the world at the moment and unusual things that are causing this. But by the same token, they're not going to let this just run willy-nilly and keep on going, because it's going to be very difficult for them to get it back to that 150 if they allow it to go too far. So they're going to do whatever they can to try and manipulate this back down again, whatever that takes. If it's one of their government meetings or whatever it takes, they're going to try whatever they can to get this yen back down to a level. Now, the yen has hit this level. It's hit this 159 level. It's on its second red candle, possible short here. Now, like I said this morning, we could wait for it to break through this trend support, which is part of our system, and then confirm that it's going short. Or we could just be stupid about it and easy about it and just take the short right here. And it's the same thing. Because every single trade that you take, every single trade, and I don't care how good your system is, or how great you think your edge is, or how intelligent you might think you are, end of the day, it's a 50-50 thing. If I click the button here to go short, it could go long. If I click the button here to go long, it could go short. That's the basis of it. But what we're looking at is high probability. But what is the high probability here? Here's the question, because everybody's got a different system. And just like the question is different regimes, different strategies. So for example, a person who's trading with the trend here and doesn't have this resistance line in, which way do you think they're going to trade? Clearly, they're going to trade along. They're going to take this trade long. They're going to look at this. They're going to see this come down to this level here. Look for that bounce there. I'm going to take this trade long. Why? Because they're trading with the trend. They're trading with the trend and they don't put that resistance in. But for a person like me who trades with support and resistance, I'm going to put that resistance in. That resistance tells me that every time the price gets there, there's some money waiting. There's generally money waiting in this area. There's money, there's money, there's money. That's telling me that it's a good area to take a short in. And if I want to be just stupid easy about it, I look at it and say, well, when it reaches that point, I'm just going to go short. I can do that. That's as easy as it gets. Or I could be a little bit more complicated about it and say, well, maybe I should wait for it to break that trend support, which is a good idea, because the person who's trading with the trend is looking for the long trade off of there, and the person who's trading against that, who's waiting for that to break, like myself, is counter trending, and we're looking for the short trade on that. But the basis of this is keep it simple. Don't put 1 million different indicators on your chart. We can add indicators onto this chart like you cannot believe. We can add the William percentage range. We can add volumes. We could add adaptive moving averages, normal moving averages, Bollinger Bands. What about Ichimoku? Lovely one, that's so amazing. Standard deviation. What about the oscillators? Average true range, momentum, MACD, RSI, stochastic. So many different indicators that you can put onto a chart. And then on top of that, you can add to that, and you can have 25 charts on your wall just to be a little bit even more complicated. And then if you don't like that, how about we add some numbers on the side and some little pictures and figures and all kinds of goodies, you know, whatever you like. You can go mad. You can put all kinds of stuff on that you like. You can have bars running across the top and all that fancy stuff. But do you think that's going to make you money, or do you think it's going to confuse you? Obviously, it's going to confuse you. That's what it does. It's going to distract you from what you're doing. The other thing it's going to get you doing, it's going to get you watching charts all day. And you don't want to sit watching charts all day. I don't want to sit watching charts all day. Why do we want to sit watching charts all day? I come in, I spend a couple of hours, and then I do whatever I want to after that. Do whatever else I want to. And if it so happens that I'm doing it on the computer, like making a YouTube video for you guys or something to that effect, then I can check back on it quite easily. Or if it's going down to the beach or going to the shops or going for lunch, then it involves something more tricky, like checking on my phone or perhaps coming back to the office to have a look and see what's going on. But I will do that a couple of times a day just to check on the trades and see how things are going. My trades this particular week, most of them went quite well. Most of them made quite decent profits. A lot of them were taken out by trading stops, which is how I trade out most of the time. And yeah, I think all of them were taken out by trading stops this week, actually. And all of them made target. So it was actually quite a decent week, to be fair. 1 second. Let's have a look here. I've noticed I tend to hold losing trades for too long. I know the correct move is to cut losses and protect my capital, but in the moment I sometimes hesitate. Any advice on how to overcome this? And uptrend. Okay, so holding your trades too long is one of the issues that people do get themselves into quite a lot. You know, so many people tend to hold their trades too long. One of the biggest issues is, as you know, our strategy is simple. Our strategy is, for example, we look at the stop loss and then we put a take profit in and we say we want to take profit there. And best laid plans of mice and men. That's our plan. Say, oh, we're going to put this stop loss in here. Let's put it up here at 161 just to make it look a little bit bigger. And look at that profit that we're going to be making on that huge profit that we're targeting all the way down here. But then what happens? What happens is it goes the other way and it goes into a loss. And it goes into a loss and it keeps on going. Now, the way to negate holding on to your losses forever is to understand this one thing. You look at this trade, you say, I want to go short. I want to take this trade short. And I want to target these lower levels down here. And I know it should get to 150. So I don't really want to target 155. Do you know what? I actually want to target 150. Let me be greedy about this and target 150. What a great idea. So I target 150. But the first thing I got to do is determine where my stop loss is going to be before I even look at that. So what I do is I say, if I take this trade, where do I want to put my stop loss? Let me look at this. Above this resistance, pretty much anywhere, I'm looking at an area where this trade has become invalid and it's probably going to go long because it's going to probably break out. But let me give myself some room. Let me put it at 161, 161.3, 161.5 even. You know, just give myself that room there, all that space up there for this to move if it goes the wrong way. But then make this conscious decision in your trading. And that is an invalidation. If my trade has gone that way, I must realize in my head psychologically and with all the fear going on and everything that I've made a mistake, that I've got the trade completely wrong. And the only obvious thing to do is to get out of that trade as soon as I possibly can. Now, I can wait for it to go all the way to the stop loss and let it take the whole $1,000 if I'm risking $1,000 or $10,000 or whatever it is you're risking. You can let it take the whole amount. Or you can say, look, it's gone into that area, look at it and just go, you know what? That's just so wrong. This trade is just so wrong. I tell you what, let's just get out of the trade right here. Let's move on. Let's not be in the trade anymore and just walk away. Because then you know that you're not going to do anything, because what most traders do, and this is where the problem comes in, when the trade gets to this 161.5 and they're in a loss, something in their mind tells them that they're going to somehow get their money back. And they're going to somehow, with this one trade, get their money back. So the biggest mistake they made is stay in the trade and move the stop loss away. Because that's the first thing, move the stop loss away. If you move the stop loss away, it can't get taken out and you're still in the trade. But you sort of put a blindfold on to the drawdown that you're in because you're $1,000 in drawdown. But you put a blindfold on and you ignore it. Just like all the things that are going on in the world at the moment, you ignore it and just keep on buying. Now you look at it and think, no, I'll just, if it gets to 1,500, I'll have another look at it. When it gets to $1,500 down, it moves all the way up to there. And then you go, you know what, let's just give it another $500. And it goes to 2,000. And it just keeps getting worse and worse and worse. But at some point, it gets even worse. You dollar cost average. You think, well, do you know what? If I actually buy this again, if I buy another, I don't know, contract or whatever it was you bought, if I buy another one of those, then maybe I can actually get this back to zero, because then I'll have doubled up and then my average cost will be at 161 instead of 160, and it'll be 163. It'll just come back to 161. I'll get my money back. If it does, by some hook or crook luck, come back to that and it gets to zero, you're probably going to get out of the trade at zero. And that's going to be a relief trade. Lucky you if that happens. But for most people, when they dollar cost average, it just gets worse and worse and worse. Now, there's two things that are going to cost you when you do this. And there's a lot of traders out there that will tell you, yes, but these are cyclical. They go up and they go down. You know, it goes up and then it goes down, it goes up, it goes down, it goes up, it goes down. So it'll always come back. Don't ever believe that. Don't ever believe that. Because while it does that in the short term, over the long term, it can take years for a price to get back to where it was. So don't go down that road. That road is going to lead you down the wrong turn. You just don't want to do that. What you need to know is that if you dollar cost average, you're probably going to get yourself into more trouble than anything else. Now, here's the thing. Even if it does come back to zero, you've wasted a lot of time sitting in the trade. And that money or those funds could have been put to better use, perhaps in the S&P 500, making you more money, or perhaps in oil, making you more money, rather than being stuck in the US dollar Japanese yen, which went the wrong way for you. Number one. Also, you're sitting in a trade that's costing you money. They're charging you every single day on leverage trading to hold that trade. Look, generally, if you're short, then you're better off because you kind of get money back for it. But if you're long, you're going to pay a lot of money for holding that trade for a long period of time. So you don't want to be holding that trade for a long period of time. So the way to get around holding your losses for a long period of time is to sit down, put it into your head that if I hold a trade for too long, it's going to cost me a lot of money. If I let it get to my invalidation area and stop loss, clearly I'm wrong. Why am I holding on to the trade? For what purpose? Surely I can put this money to better use in something else. Let me put it in a little bit of a better picture for you, like an easier picture for you. If you have an investment, and you've invested in a company, and that company, let's say it's Joe Blogg's supermarket. Joe Blogg's supermarket, you've invested in Joe Blogg's supermarket, and you've invested in a number of other companies as well. But Joe Blogg's supermarket starts doing quite badly. Joe Blogg's supermarket starts showing signs of fraud or signs of problems or signs of bankruptcy. So you decide, look, I'm invested in Joe Blogg's supermarket, but I don't really want to be there anymore because there's a good possibility this is not going to go in my favor. So it's a good idea if I get out of Joe Blogg's supermarket. the best thing you can do, because your money's lying in there and it's doing nothing, it's being wasted. What's the point? So you sell the whole product, you take it and you put it into Nvidia or Coca-Cola, which you know is going to do so much better with your money, because that's what you would do. So in leverage trading, think the same way. If it starts going against me, then I need to move my money. I need to sell up, take the small loss, take the small losses, and work on finding the big wins. Because the big wins are the ones that you want to concentrate on, not the small losses. You know what? Most of you probably find yourselves concentrating heavily on the losses, concentrating heavily on the trades that are losing, rather than concentrating on the trades that you're winning. You know, if you concentrate on the trades that you're winning and you follow them up and you move the prices around on there and you buy more stock in a winning trade and you move your stop loss up and you manipulate a winning trade, isn't that more valuable to you than trying to work on a losing trade? Spending all your time on a losing trade, working on that losing trade, trying to get it back, while all your winning trades are just going all over the place and you don't really know what's happening. So don't just get into your mind this one thing. If you've chosen a stop, it's an invalidation. If it goes into that area, the trade's invalid, walk away, take the loss. You've got to learn to lose. You've got to learn to lose some money. You've got to learn that you're going to lose some money, as long as you understand that you're targeting bigger wins on the winning trades, and then concentrate all your energy into positive energy, into positive winning trades, not losing trades. That will help you with that kind of scenario. Now, the simplicity of trading is the important part that we're talking about today. And the simplicity of trading is really just based on just draw a resistance in, just draw support in, just look for the liquidity, and just sell when it gets there, buy when it gets there, and that's it. If you get a breakout trade like this US dollar ZAR, it breaks out, comes back, retests, you buy it. You don't have to wait for the retest. Many of us do. Many of us, it's a big thing in the market to wait for the retest before you go. I don't mind if you do. Me, I prefer to just get in and go, and which I did recently, and then I actually got out in a profit, and now I should be getting back in again, but I haven't got back into this one yet. It's come back again, come through, it's going up. So it's a simple line. This was a resistance line, and it took liquidity, it broke through. And this is like you're chipping away at a wall, and eventually it just breaks through and it goes. And that's why trading can never be guaranteed. You know, for example, every time it hits there, you go short. Every time it hits there, you go short. And then the one time it breaks through. But if it breaks through, what you've got to understand is that then you want to turn the trade around and you want to go long, because it's broken to the upside. It's a breakout trade. And then you're going long with that. It comes back to that. It's now become the support. It's no longer a resistance. It's still a liquidity area. Still an area of great importance to you with loads of money. So that's why it's gone back up again. People are buying. Don't look at it as straight lines. You've got to actually very often draw these little blockies in, which give you much more area as to where the money is. Okay, so be careful of just, what I do is I just draw a line in because I'm lazy, but you can actually draw the blockies in and get an area, a proper area of where the money is. So this move through here is not important. It's still touching the line even. And you can't really look at that as, oh, it's broken through there, so why wouldn't it go short? No, because it's probably still in the area of liquidity, still in the area of money. The liquidity area is from the top of the candle to the bottom of the candle, right across, and you'll probably find that it takes up quite a bit of the space here. So for example, if I just take this candle here, the top of the wick to the bottom of the wick, and I draw it through there, you can clearly see that it's basically running in this area. This is your area of liquidity in there that it's running around in. It's come back in there, retested, gone back out. So you can draw the blocky in if you want to, make it much more pretty, and you get a much better idea of the simplicity of where the money is. It's very important to understand that it's not complicated. This, for example, is the DAX. All the indexes are going down at the moment. Now, all you have to do to keep it simple, what's going on in the world? What's happening in the world? Are things euphoric or are things very negative? The bigger picture at the moment is very negative. The world is in strife. I mean, if we have an oil shortage, for example, because of the strife that's going on in the world, isn't that going to affect all the businesses somewhere down the line? Aren't we going to have an economic problem worldwide? Everywhere you go, you're going to have some form of economic issue, which is going to affect what? All the shares. It's going to affect all the shares. And it's also going to move the currencies around a little bit. It's going to move the commodities around a little bit. You have to look at those scenarios. So now you know that, well, the weighted probabilities are that the indexes will move to the downside, not to the upside, because what's euphoric? Nothing's euphoric. Nothing's pushing it up as we stand at the moment. Now, I know a lot of you wait every week for the jobs figures and CPI and those types of things to come around, and that's going to make all the difference to the markets. But at a time like this, that's not going to change anything, is it? It's not going to make much difference. And even when nothing's happening in the world, then the CPI data, the non-farm payrolls data, and the jobs figures are not going to move the world. What they're going to do is they're going to move it around in the short term for half an hour, for maybe an hour, but then after that, it's not going to do anything. It's just going to come back to where it started. It always just comes back to where it started. So this was a bit of euphoria because everybody thought that somehow some of the information in the market was going to make a difference, but all it did was make a dead cat bounce all the way up to that trend resistance, cause it to bounce, come back down again. Now, if you want to make it really stupid easy, if you want to really take it down to the easiest trading in the world and not be complicated whatsoever at all, then all you got to do is say, when it gets to this resistance, I will sell. When it gets to this support, I will buy. Simple, easy. That's the easiest, most ridiculous way to trade. And if you do that, you're going to have the same result as the person with a million indicators on their chart. It's a 50-50 chart. Whichever way, that's what's going to happen. And then if it breaks out, I'm going to go long. Or if it just gets there and starts to go short, I'm going to go short. That's how easily you can trade. What I've done is I've added the trends in between so that I can see when they break, so that I can see if it's staying in trend. I can see how far away from either side, check my risk to rewards, and I can really overcomplicate issues. Another really super simple way to trade is if you use the RSI. And let me see if I can put the relative strength index here for you at the bottom. And what a lot of pro traders do is they don't even use support and resistance and trends. They just basically look at the RSI. And if it's overbought, in other words, above 70 on the top here, they'll sell. And if it's oversold at the bottom here, below the 30, they'll buy. So that's why you get this rush of money moving up here. So if you want to keep an eye on what the pro money is doing, because most of them use this RSI, you can just look for that. And if you see that, sort of start airing caution to the wind and say, well, you know, I don't really want to be going short based on that. I'll wait until that clears up and then I'll start going short again, because what they're doing there is they're just going to buy. Just be careful of trying to trade that way though, because they've got lots of money. So they can buy here and wait. And it doesn't matter if it goes into drawdown. Whereas you and I might not be able to hold on, because this can stay here for a really long time while this keeps on going. And it can really mess you around, which is why I don't really bother trading with the RSI, is because I know that sometimes when it gets to that level and you think, oh, they're going to buy now, they don't. You know, and it just keeps on going down, going down, going down. And that RSI stays below this line for quite a while. And while it's staying there, that might be staying level, that might be coming down quite a lot. So be careful of getting caught up in that. So that's why I say I don't really bother using the RSI to trade. But if you do use the RSI to trade, you can also trade it with the trend line. So for example, through here, if it breaks through there, it's long, you know, you're looking at that kind of scenario, which actually didn't work out because it's come down again. These things don't always work out. Delete indicator. We don't need that indicator in there. Like I say, I don't usually use those indicators, but I mean, that's another fine way to keep it simple. Just keep it completely simple. What some people do is they use the MACD, for example. Let's just see, is the MACD, there we go. So I'm just going to put it on here. And usually they got two lines. Okay, this one is a simple MACD where they're sort of buying when it crosses to the upside and selling when it crosses to the downside. Normally you got the two lines like the moving average crossovers, and they just buy when one crosses the other, and that's as simple as it gets. Keep it easy. You don't have to overcomplicate it either. You can do it with stochastic as well. Same sort of thing. So if you want to keep it simple, that's as easy as it gets. It's so easy if you just don't overcomplicate it. You know, we can go into detail about all these different indicators. We can go into detail like trading with the trend, trading against the trend. But we trade three simple ways with the charts. And that is we trade with the trend, we trade in the trend, we also trade in a range. What is a range? It's going to the side and it's between the resistance and the support. Now, a lot of people say, yeah, but when it trades to the side, it's not going to make money. Of course it is. It goes up to the top and it goes to the bottom. You're going to make lots of money that way. And then breakout trading. And when I talk about breakout trading, I talk about break of structure within the range. For example, if I draw this trend line in here and it breaks that structure to the upside, then it's going bullish and it's changed its direction. But my main break of structure is if it breaks the resistance to the top or it breaks the support. Breakdown trading to the bottom, which we can clearly see. And we're not going to see it there. Can't remember where I saw it. Was on, no, it wasn't on gold. On the US dollars that they are. Okay, there's a clear example of breakout. So it comes up, hits the resistance, goes through, carries on up. Normally wait for a retest and then carry on up. I don't bother with a retest because half the time it doesn't happen. But when it does, it's great because you've got sure confirmation you can buy and go. But then it even came back again afterwards anyway. But it looks like that's going to now start moving to the upside and go on to the upside. That's as simple as you want to keep it. You do not want to overcomplicate your trading because you're just messing yourself around. Think about it this way. Every single trader in the market, has got his system. They've all got a system. And every single trader in the market believes that their system is correct. So when they take a trade, they feel very confident that they're going to make a profit. And you have the same feeling. No two traders should have the same agreement when buying and selling. So if I'm buying and you're selling, then clearly you've got opposing thoughts to what I have as to what's going to happen with the market. And that's how markets are made. So just remember that. You're not trading against candles. You're not trading against lines. Lines can't predict the future. Behind those lines is another human being who's buying and selling shares, who's buying and selling his stock to you. And it's available to you to buy or sell. Human beings, that's what it is. Often institutional are human beings, but it's human beings all the same. How do we take our trades? Very simple. Risk the same amount on every single trade that you take. Don't change the risk amount, because if you change the risk amount, you're messing up your business plan because you don't know how much loss you're taking in the market. You don't know where your losses are. You don't know how much money you're losing. That's the important thing. So keep the risk the same on every single trade. So let's say you're risking $1,000 per trade. And it might be 1% of your account. It might be more. It might be less. It's up to you how much you want to risk on your account. But just remember, if you risk 10% on a leveraged account, you're probably going to lose your account because you're going to lose 10 trades in a row maybe, and on a bad day, you're going to lose your whole account. Whereas if you lose 10 trades in a row risking 1%, you only lose 10% of your account. So just work in between that, work out your risk threshold and how you feel, how many trades you're going to win or lose. Just remember, trading's normally 50-50. There's a good chance you could win 5 trades in a row at least. Now, here we go. So now you look at this and you say, okay, I'm risking $1,000. So the first thing you've got to do is determine where you want your stop loss. So, well, I'm going to go short and I want my stop loss up here at 161. 161.250. That looks like a fair stop loss. You know, if the price gets up there and gets into this area, this trade's invalid. So that's what you do. So like my stop loss is $1,000. Now that's 991. It doesn't have to be exactly 1,000, guys. Just close as possible, right? So now you say that's where I want my stop loss. I'm going to risk $1,000 there. Take profit. I want at least down here below that low there. So that looks like a decent area. There looks to be some liquidity in this area. That's at 153.8. That looks like a decent area to look for some profit. Now, what does that tell you? That tells you that you've got a pretty decent risk to reward. That's what you're looking for. You don't want to be making less. You don't want to be targeting $373 to lose $1,000. That's just stupid. You want to be targeting a decent win. And if I put my win down there, then I'm making a 2-to-1 risk to reward rate. I don't tell you must make 2-to-1, 3-to-1, 4-to-1. It doesn't matter. All I say is make more on your wins, lose less on your losses. What I've determined over time is if you take a number of trades, that some will be 6-to-1, 4-to-1, some will be 1-to-1, some will get taken out a bit earlier than that because, you know, trailing stops, things like that. But on average, over time, your risk to reward will come pretty close to 2-to-1 no matter what you do. If you follow targeting more on your wins and keeping your stop loss or keeping your risk small. In other words, if this goes into this area, you don't have to wait for it to lose $1,000. It's just that if you're not there, that's your maximum risk. If it goes into this area and you can see it's cruising into that area and going wrong, do yourself a favor. Do everyone a favor. Cut it short at $300, $400. Get out. The trade's not working out. Walk away. Unless, of course, it's just someone said something and it's bouncing. That's fine. That's why you've got the stop loss up there, just in case that happens. But in general, what you're looking for is just an area where you can look at and say, my trade's invalid. So there'll be a lot of trades where you actually get out of your stop loss a lot earlier than the actual $1,000 you're risking. But you know that you're risking a maximum of $1,000 per trade. You're trying to make more on your wins. Once you start going into profit and it starts working out for you, you take your stop loss, and you move it into the profit areas. If you're profiting down here already, you take your stop loss, you bring it down. You don't click out. Don't click out early. And then you follow it down, follow it down, follow it down, follow it down. Who knows? It could go all the way to the bottom and make you a fortune. And that's how you effectively take the trades. That's how you effectively follow the business plan. And the business plan has nothing to do with the charts. The business plan is just applied to the charts. In other words, your business plan is to risk the same on every trade. The business plan is to make more on your wins, and then eventually you'll come out on top. But it's not about the charts. The charts only help you to manage that trade. Hope that helps. Right, let's get on with questions. Okay. Sometimes it's easier to pay a few bucks for a new prop firm account. I forget about my ego, that blew an account last week. Prop firms or factories are bad habits. Hi, Blue Mango. Based on weekly RSI, I started accumulate BTC regardless of narrative. Okay. There's a lot of controversy on BTC, on Bitcoin, crypto. If there was any crypto that I would be interested in, it would be BTC. Excuse the Coke for a change, but, you know, I am invested in it, so I might as well drink it. Right, so here, look, at the end of the day, here's Bitcoin. My narrative is that it'll probably go down. Other people's narrative is it'll probably go up to 200,000 or something. My personal feeling on Bitcoin is that it's built on fresh air and it's got nowhere to go. That's just my personal feeling. Would I invest money in Bitcoin long term? No, I'll always put it in shares. I'm going to do better there for myself. I know there's a lot of Bitcoin millionaires that have made a fortune out of Bitcoin. Now, here's my problem with Bitcoin in general, and that is, if this happened to the S&P 500, or the DAX, or the FTSE, or the SA 40, a national disaster would have been called. In fact, a world disaster would have been called. The Bitcoin was at 126, 125,000, almost 130,000. It came all the way back down to 59,000, 60,000. A 50% loss. And this is in a matter of 3 months, something to that effect, okay? It's come all the way down. Like I say, if this had happened on any index, there would have been a world disaster, a national disaster called based on that alone. And this has happened because Bitcoin is built on a simple feature, and that is buyer and seller. It's not built on any assets. It's not built on any value. It's not built on any companies, nothing. It's built on nothing. It's built on one trader against another. A market has been created. That's what a Bitcoin is. Can you hold a Bitcoin in your hand? No, you cannot. It does not exist. It's fresh air. So what you're dealing with here is fresh air, which is why I do not invest in it. Trade it? Yes, of course we trade it, because it's a product, it's a leveraged product. A market has been created to trade with. But trade with caution, in the sense that I look at it as it could disappear at any moment. If it does disappear, it would probably disappear on a Friday afternoon as usual. And at the end of the day, I've also got to look at the possibilities of, if this was to go down completely and disappear, there would be a lot of big companies that would be in trouble as well. Because a lot of people have invested into crypto, have invested into Bitcoins and that sort of scenario. Why does the value grow? The value grows. There's a narrative of there's only 21 billion or whatever available, something to that effect, and most of it is sold. So when it gets to that and it's all sold out, then it's going to become more valuable. But what's going to become more valuable? The fresh air that it's built on is going to become somehow more valuable than it was before. Now, what I've been watching is it's kind of been following other markets, because investors are moving money around in their safe havens, as they put it. But there's no safe haven in a product that can lose 50% of its value in 3 months. And then it goes back, and then everybody says, oh, it's going to 200,000, it's going to 1 million, or whatever the case. Based on what? Based on what knowledge? Based on what asset value? Based on what information? It's not even a company that's being run or anything. It's just crypto. So the way it stands at the moment, the reason I called it to go down to 40,000 was because of the giant head and shoulders on the day, which we saw. We all saw it. There it is, giant head and shoulders on the day pattern above the support. There's the shoulder. The shoulder's above 97,000. Breaks that shoulder, then it's negated, but it isn't negated. This, as it stands, still stands, and if we project that head, it goes down to about 40,000, in fact, 37 or 38,000. So, caution advised on Bitcoin as far as that goes. And the other thing you've got to worry about, if the world was to crash, if the world was to have a really, really, really big problem, which it is having at the moment, just in case you didn't notice, Bitcoin is one of the products that, in all likelihood, might suffer. So keep that in mind as well. But like I say, if the S&P 500 did that, if the S&P 500 was to lose even 30%, the world would go into a spin. And, if you think about it, the S&P 500 is only losing 100 points here, 100 points there, and people are panicking. The S&P is crashing. Index futures are destroyed. They're plunging. Those are the headlines, and they're moving like 100 points or 200 points max. Nothing happening. Not even, you can't even talk about the percentage points yet. And 600 percentage points or 700 percentage points would be 10%. And we're talking about 100. We're talking about 200 max, and we're talking about plunging. You look at crypto, and they're talking about a 50% drop, and nobody's saying a word. Everybody's just like, it'll be fine. It'll go up. It'll be fine. It'll go good. So buying now against the narrative on the long term, if they're going to be around forever, is actually an intelligent way to buy, because that's what Warren Buffett would do if he was buying a product. On the flip side of that, Warren Buffett has stated unequivocally that he would never buy Bitcoin or crypto, as Jordan Belfort and a few others as well have actually stated unequivocally that they would not buy this product. So on that front, yeah. But, if I was going to buy into a product like Bitcoin, and then I would look at these areas. I would be looking at, the lower points. I mean, it has dropped 50%. And the RSI would, in all likelihood, be quite down. Let me have a look at the RSI, because I haven't actually looked at it. So let's have a look at the RSI, Relative Strength Index, on Bitcoin. Well, at the moment, the RSI is pointing to the upside on the day chart. Let's go to H4. Also pointing to the upside on the weekly. On the weekly, you've got pretty much an RSI which is oversold, but you've also got a level down here that it can get to, which is quite low. You see, if you look at this on a weekly basis, this is quite scary. Look at this on a weekly chart, and then tell me you're happy to put your investment in here, even though the RSI is at the bottom on the weekly chart. And I'm just going to remove that out the way because it's normally just in the way. But look at that weekly chart on Bitcoin. If I was looking at weekly charts, I wouldn't put my money in here. Definitely not. There's the big head and shoulders. Okay, obviously clearly pointing itself out. There's a support down here at 40. Let me just put one of these on. There's a support area down here, 55, and then 48. Okay, so there's a support area between 48 and 55 that it might want to drop through. Okay, and then the next level, 25,000. Okay, 30,000. 25 to 30,000 is the next level after that. That's pretty scary. That's pretty scary. So you got a level here at around 55, 40, 48. There's a level here, okay? But then there's a level much further down, which is pretty scary. This little level here is the one I predicted, 40,000. It could get down as far as 20. Imagine if it goes down to 25,000. The amount of money that would be lost in Bitcoin. Yeah, that is quite hectic. Very hectic. So yeah, just thought I'd point that out. It's for those of you who are interested in it. I agree. It does look like it's forming a base. But like I said, put it on the weekly, and it does look a bit scary. It might sort of be forming a base based on this area here. So it might be sort of leveling out here at this level. But yeah, this is the first level, and that head and shoulders tells me it could go to 40. I'm just very cautious on this one. Trading on a daily basis, you can do that because like normal, you've got these levels to work with. But I'm weighting my trades towards short. So yeah, when, oh geez, look what I did now. Now I've got to find it again. I just removed BTC from the chart. Can you believe it? Why do I do? Oh, there you go. Back up again. Okay, that's better. Now go back to your spot, you little bugger. There you go. Perfect. Right. Okay. On the swap fees affecting the risk reward 1 to 2 and the end of profit, since the trades take at least several days being taken on a 4-hour time frame. Depending on your broker, and depending on how much you are paying, the swap fees can be expensive. Generally, that's something you need to negotiate when you're trading. But generally, I find on the cash accounts, the swap fees are much less and they don't really affect you that much. But on the funded accounts, they're quite expensive. Yes, you must watch out for that. They can be quite costly. How long do you want to keep your trade for? And then just keep in mind that, when you're short, you're generally getting a positive back rather than paying. But yeah, the fees can be quite expensive, particularly on the funded accounts. on the cash accounts, I find my accounts are very cheap. So yeah, watch out for those fees. Those fees are heavy, particularly, for example, on the VIX. I mean, the VIX is expensive to hold, and you hold it for a really long time. It gets really expensive to hold it, but then it makes you a huge profit. So as long as you're making a profit at the end of the day. Now, on 4-hour trades, how long are you planning to hold the trade? You know, you don't have to hold it for months at a time or weeks. I normally, on average, probably in a trade, max 3-4 days, and you're out. Some trades go a bit longer, but generally 3-4 days you're out. And if you've made a decent profit, then it's not going to affect you. But you do have to calculate that into your equation. You can't just ignore it, of course. You know, like I say, it depends on your broker and it depends who you're trading with. That makes the important difference. So here's gold again. I was long on gold and I moved my stop loss up and I got taken out in profit. And I was actually going to get back into the trade, but I was waiting for it to get all the way back down to support and it didn't. Now it's gone back up to this level here. So now on gold, I'm just watching to see if we get a clear break to the upside here. If we get a clear break to the upside here, that might give me the opportunity to get another trade in gold. As it stands at the moment, surprisingly enough, it's not a safe haven trade at the moment. It was when people jumped in, but then they decided that oil was a better prospect. So everybody went jumping into oil. But yeah, oil is a problem. Oil is becoming expensive, which means fuel is becoming expensive, which means products around the world are going to become more expensive. Companies are going to struggle with this. It always amazes me, though, how when oil is cheap, they don't exactly reduce the prices much, do they? They don't bring the prices down. But the minute it goes up, that's an opportunity to just increase everything. And if this all comes back down to these lower levels again, watch, they're not going to bring the prices back down again, are they? They're going to leave them up there. It's, when you think about it, you feel kind of scammed somehow. But yeah, it is going to affect economies around the world, and it is going to have some lasting effects as well if that continues. So that really does need to go away. Look, all the indexes are doing this. They're sort of sloping to the downside, and they are extremely bearish. So it is kind of an interesting scenario there. My target for BTC, okay, no, that's fine. Thanks. Yeah. Was that? Yeah, definitely. Swap fees. This is the Japanese, the JAP 225, the Nikkei. Look how nicely it broke out of the channel, broke to the downside. So now what you've got here, now you've got a completely new trade. So, you know, when you're keeping it simple, just keep an eye on this, you know. You've been trading in the trend, trading in the trend, trading in the trend, trading in the trend. And this has gone on for quite a long time. See, it's been in the trend all the way up to there. But now it's all moved. It's all changed around. It's no longer the same trend that you had earlier on. And now that the trend is broken, you've got to rethink the whole process because that channel is no more. This is how you look at it, guys. So now you can take the channels out if you want to, just to re-look at everything. But now what you got to do, I'm going to take the channel out. I'm going to say, let me remove this channel and just get it out of my life. There's the channel gone. And I'm going to start looking at a new channel. And then what I do is I take it to the day chart and just see what I got on the day chart. The day chart's going to give me a lot of information. Can I draw support? Can I draw, you know, there's not much of a support and resistance in here. This is a more trendy sort of thing. So then the easiest thing to do is to put the trend line back in again. So now I don't want that trend line. I'm going to take it out. I'm going to say, well, I'll tell you what, let's take it back and work it on the immediate trend and just see what's going to happen there. Now, there is a bit of a support level here. not much, a bit of an area where there's some money lying around here. So you can put that support level in there and say, all right, let's just see what happens with that. That's actually more of a, let's just pull it down a bit. I'm going to say it's actually a little bit lower. It's more there. It's actually quite a big area, this. Very big area, this. But that's more of your support level. That's more your area where, the price is going to get to. And then you can look at that. Then you can take it back to the H4 and just see what you've got. And it sort of changed the whole picture now. That was your Nikkei going straight up in a channel. It's broken out of the channel. It's going to the downside. Now suddenly you've got this trend resistance going down this way. That's your day. And it's staying bearish. But it's hit this level here where there's a whole bunch of money in this area. Will it stay above that and go back up again and break out and continue on up? Or will it break through this level and head on to the downside? Now keep in mind, if it breaks to the downside, there's quite a lot of distance down. That's why I was making smaller, because it's going to go all the way down to these levels down here. That's quite a big fall. So if something happens in the market that can cause it to fall, you could make quite a lot of money on a short, on a trade like that. So that's what you've got to keep your eyes open for all the time. Okay. Okay. Oh, right here. When I have a win rate of 30%, it's not a better plan to go long when I think to go short. My risk to reward is 1 to 1.5 to 1 to 2. I'm really good in predicting it wrong. Do it like George from Seinfeld, the opposite. You're not far wrong. You're not far wrong, because like I always tell you guys, trading's 50-50. And if you've got to the point where you think, do you know what? I'm so ridiculous when I trade that every time I trade, I get it wrong. So I get 7 trades out of 10 wrong. Maybe I should take all my wrong trades and make those my positive trades, and take all my right trades and make those my losing trades. Why not? Trading's 50-50. If you had no system at all and you were just choosing which way you want to take your trade, all you would do is manage your risk and follow the strategy. And the strategy is risk the same on every trade and try and make more on your win, obviously. So if you feel that's how it's going, then try it out. There's nothing wrong with that if it's going to work for you. But I can tell you what's going to happen. I can tell you now what's going to happen is suddenly it's all going to go the other way for you for some reason or another. You're going to end up in the same boat. But yeah, I get it. I love what you're saying. And but it doesn't matter what you do. For some other odd reason in the market, and it's got a lot to do with psychology, because you see the mistake that all traders make. Every trader makes the same mistake, and that is they believe in the lines. They believe in the candles. They believe in patterns. They believe in charts. Okay, so now you're believing in the chart, and you're believing that the chart's going to predict the win rate for you, that the chart's going to predict the future, that you're going to somehow know what's going to happen next because of said chart. When actually, it doesn't predict anything. When actually, it's just a means to an end. It's just a way for you to manage your trade. And whether you're choosing it right or wrong, or whether you're getting it right or wrong, the best traders in the world, and I'm not talking about anybody, I'm talking about your best traders in the world, find it hard to beat a 50% win rate. You always end up with a 30 or 40% win rate. If you're doing a 30 or 40% win rate, you are doing extremely well, as long as you're following making more on your wins. If you're making less on your wins and you're just scalping and taking profits and you don't really know what your losses are, then you can have a win rate of 80%. Anybody can do that, 60, 70, 80%. If you've got a win rate of 60% and you don't know what your losses are, then you're not a good trader. In fact, you're rubbish. Because you're just taking profits whenever you can and you don't really know what your losses are. But if you're managing your trades and you know what your losses are and you're making more on your wins and you're making those wins and you've got a 40%, 30% win rate, you're winning. You're doing well. Believe me, you're doing well. You're doing really good. And don't knock yourself out about it. The best traders in the world, the most profitable traders in the world, struggle with 30-40% win rates. That's just how it is. And the reason for that is, the simple reason for that is they keep it simple. And that's the one thing, the aha moment that came to me in life was the best way to make the money is to keep it simple and not to overcomplicate it. So what they do is they keep it simple. They keep it very, very simple. And they buy and sell where they need to. But what they do is they concentrate on the winning trade. They make the winning trade as big as they possibly can. They keep on following it. Picture a horse race. Picture a horse race. And the horses are running. And there's, I don't know how many horses are in a horse race. I don't know. You tell me. I've got absolutely no idea how many horses are in a horse race. But let's say there's 10, okay? Let's say there's 10 horses in the race. And the horse you've picked is number 5. And it's 100 meters from the finishing line. And it's 100 meters ahead of the first horse, the horse behind it, number 2, okay? And I said to you, you can double your bet now. Would you say no? Or would you say yes? Because I bet it's 100 meters ahead of the horse behind it, and it's almost at the finishing line. Of course you're going to double your bet. Of course you would. But if your horse was at the back of the pack, and there was 8 horses in front of it, and you were coming close to the finishing line, or even coming around the last corner, and I said to you, okay, you can double your bet now, you'd run in the other direction and say, rather just give me my money back, because this is not going in my favor. Yet with trading, you do exactly that. With trading, you take the losing horse and you start betting on it and you start adding to it. And the winning horse, you run away from and you leave, or you try and jump out. You jump out just before the finishing line and you take whatever you can. You know, like, it's like if you're 100 meters away from the finishing line, you're winning by far, and I say to you, you can have your money back now. Oh, yeah, I'll take it. No, you won't. You're heading towards the finishing line. But in trading, you get out early, you dump your trades. So yeah, it's all about the psychology. It's all about how you think. It's all about how you work with the trades. So if you take your trades and you follow them to the finishing line and you push them through the finishing line and you make as much money as you can on those winning trades, then and only then will you start making a profit, because your win rate's always going to be low. Win rates don't make you money at all. Win rates are worthless. All win rates are is something you can boast about, but if you win 8 trades and you win $80 and the 9th trade you lose $1,000, how's that win rate helped you in any way, shape, or form? And most traders, every trader's made the same mistake by following a loss down into the pits of hell, by dollar cost averaging, by making their trade worse and worse and worse to the point of, I can't do this anymore. I don't know any trader who hasn't been there, who hasn't done that. But I know a lot of traders, many traders, who haven't gone into a win and gone, I'll add more to that and I'll make more of that, and built that win up to a huge gargantuan winning trade. I know a lot of traders who dream about it, but I know a lot of traders who haven't done it. Something we used to call a 10-bagger. You know, when you pick that trade and it goes in your favor and you're so excited, and you know, you just want to add to it and make more and grow it and make it bigger and make it bigger and it just keeps getting bigger and bigger and bigger. And there is a point that you get to on the winning side as well, where you're just not sure if it's going to pop. But while it's going, it's fun. And I know a lot of traders, I don't know a lot of traders who've actually experienced that or do that. But I know just about every trader has done it on the losing side. Just about every trader I know has had a losing trade like that. It's kind of strange, isn't it? Okay. Why is the volume crazy? Look at it on US dollar, Japanese yen. Don't use volume on Forex. You're wasting your time. Volume is for shares and for index. Okay. Don't use volume on Forex. You are wasting your time. Okay. Isn't really not a 50-50 chance when you aim for at least 1 to 2. Okay. But isn't really not a 50-50 chance when you aim for at least 1-to-2 ratio that you would probably be 25-7 unless you settle for 1-to-1? Okay, Voca, here's the thing, okay? This is what I get quite often. But isn't really not 50-50 chance when you aim for at least 1-to-2 risk to reward ratio, that would be preferably 25-75 unless you settle for 1-to-1 risk to reward ratio. I get this quite often. And it's all about understanding, okay? Let me explain the 50-50 to you. Firstly, it has nothing to do with risk to reward ratio. 50-50 has, just try and put risk to reward ratio in that closet or 50-50 in another closet. Your risk to reward ratio is this. Taking a long trade. That's my stop loss. That's my reward. That's my risk to reward, okay? What it's telling me is if I lose $1,000. If I win $2,500, okay? That's risk to reward, okay? So if that trade works out for me, I'm going to make a lot of money. If that trade doesn't work out for me, I'm going to lose less than what I would have made, okay? That's risk to reward. But when I take this trade, there is no guarantee that it's going to go in my favor to the top side. And there is no guarantee that it's going to lose. Do you get that? Okay. So in other words, when you click the button here, when you say buy, what guarantees you that it's going to be 75% win? What guarantees you that? Not your risk to reward. That can't guarantee you that. Your risk to reward is telling you how much you can win if you win. But what if you don't? You see, when you click this button here, it can go up or it can go down. No matter what your edge, no matter what your system, no matter what your probability. Go up or it can go down. That's 50-50. When you click the button, there's a chance of winning, there's a chance of losing. There are no guarantees in life. There are no guarantees in trading. There are no gurus that can predict the future. There are no fortune tellers that can predict the future. There are no charts that can predict the future. Would you believe we can't predict the future? The thing you got to understand, what a chart is a means to an end to manage your trade. What you're doing with this chart is you're looking at the past, you're looking at the probability, and you're managing the trade based on what you think is going to happen next because of what happened in the past. The past can't predict the future, but it can help you with probability. And not only on top of that, you're obviously listening to what's going on in the world, what's happening, what kind of news effects are, and that kind of weights your decisions as to which way you're going. Then you look at charts on daily, on weekly, on monthly, you go back to the H4, you trade again, and you say, well, because it's going that way on the daily, I'm going that. So that's what you're doing with the charting, is you're picking a trade direction based on some information that you've picked up. Doesn't mean you're predicting the future. You're trying to, but you can't. So that means that every time you take the trade is 50-50. So try to stop thinking about risk to reward when I say 50-50. When I say 50-50, risk to reward's got nothing to do with it. The risk to reward is the amount of money that you could possibly make or lose. The 50-50 is whether the trade will go in your favor or not. And there isn't a charting package in the world that can guarantee you a 100% that you're going to go the right way when you take the trade, or even 75% that you're going to go the right way. I hope that makes sense to you. And if it doesn't, ask the question again, because I don't mind. Okay. I think my stop loss has hit a chance of 66% and my take profit has hit a chance of 33%. This is a strange thought. I think my stop loss has hit a chance of 66%. My take profit has hit a chance of 33%. No, if it's working, look, like I said to you now, if every trade is 50-50 and like you've got a better chance of hitting a profit when you take it the other way, then try it out and just see. At the end of the day, it might be your trading method or system that's working against you. And the other thing to do is, what are you doing when you're trading? So, for example, are you following our system where, for example, it hits resistance, you take a short, okay? Do you wait for it to break through the support and then take it, or are you just taking the support? So maybe in a situation like yours, it might be good to journal what you're doing and just look back and see what you're doing that's making you go wrong as well, because that might help you a lot. Is just to figure out what you're doing that's making you go wrong. I'm easy to sit here and say, well, if you get it wrong most of the time, just take your wrong trades the positive way, but that's maybe not the right way to do it. At the end of the day, what you should probably do is just sit down and just say, why do I get it wrong 60% of the time? What's going wrong? What am I doing that's going wrong? Is there something, that I should be doing differently? And that might help as well. You see, that's why I include this line in my trading, this trend line, is because, yes, it's hit resistance. And, if trading's 50-50 and you want to keep it stupid simple, then, yeah, just take the short off the resistance and hope for the best and see what happens. But if you want to kind of be a little bit more sure about it and get a little bit more information, then it would be a good idea to wait for it to break through that trend support. If it breaks through that trend support, then it's saying to you, you know what, we're short now. Then, the odds are in your favor then. Then the odds are stacking up in your favor, and you kind of look at it and go, well, I'm going to take the trade there. And if you lose it based on that, then look back and say, well, if I did everything right and I followed everything to the T, then it was just unlucky. It's one of those 50-50 trades, and it went against me. Let me try again. Let me try that again and just see what happens next time. If it keeps on not working out, then maybe something's wrong. That's just one, comes off the top of my head for you, is just think about every time you take a trade, why is it going wrong? Which way are you trading? How are you trading? How are you picking your trades? Maybe you're getting your resistances in the wrong place and your supports in the wrong place, or your trends in the wrong place. You need 3 touches for every trend. You need 3 touches for every resistance. You should be taking your resistance off the day charts if possible. Maybe you need to learn a little bit more about patterns. Look at the patterns and see if they're getting you anywhere. Maybe you want to be following trends. We trade the 3 ways, see if that's working for you. Just figure out where you're going wrong. Maybe you've got sucked into a certain type of trading, a certain way of taking your trades, or certain products that you trade with that are not working out for you. There's a number of factors that can come into it. It's amazing, actually. And, you can't actually just copy someone, because the way you think and the way I think is completely different, for example. So when I take a trade, I'm looking at there's a lot of things going on in my mind. There's a bigger picture that all the years of trading that are there that are telling me something quietly in the subconscious. And then maybe some fundamental things going on in the world that are sitting on my left shoulder talking to me and telling me something. And I'm looking at a picture and saying, I should go short here. And there's something here saying to me, yes, but this is happening and this is happening. So my experience is helping me trade as well, because I didn't start yesterday. Now, if you don't have that and you're just looking at the picture, then you might miss something, or you're putting it in the wrong place, or just doing something just tiny that needs tweaked just to get you on the right direction with the actual trades. Yeah. Okay. Okay, so I learned to look for specific setups. Now that I'm focused on those, I lose big. Interesting. It feels like the market is constantly baiting me into trades. Do you have more people have this feeling? That you're going to get that feeling for the rest of days with trading. With trading, you're going to feel like someone's watching you. You're going to feel like someone's baiting you into trades. You're going to feel like you're getting trapped all the time. But the one thing I would tell you to be very, very careful of is I learned to look for specific setups. Drop it. Keep it simple. Keep it basic. You know what I would say? Try this for a short while. And I know it sounds stupid, and I know a lot of you will give me flack for it and say, Rob, what are you saying? But let me say this to you, okay? Do yourself a really, really stupid favor, and that is this. When the trade gets to resistance, take a short. Trade gets to support, take a long, okay? That's your rules, okay? If it breaks through the resistance, turn it and go long. If it breaks through the support, turn it and go short. Those are your rules, okay? Forget about the setups. Forget about all the patterns. That's it. Just do that. If you want to, you can do the trend line thing where you wait for the trend line, wait for it to break through the trend line and you have more confirmation and that sort of thing. But if you want to, just keep it simple. Sell off the resistance, buy off the support, dump all the rubbish, see how that goes, okay? Most important thing though is manage the risk. So in other words, if you do decide to buy off the support, where's my stop loss going to be? First thing, important, and keep the risk the same on every trade. So decide on your risk amount. I don't know how much it is. You don't have to tell everybody how much it is. Totally your personal thing. Choose your risk amount. So that's my risk. That's how much I'm going to risk on every trade. Might be $1,000, might be $200, might be $20,000. I don't know. Keep it the same on every trade, and then target more profit. Obviously, you want to be making the profit at the resistance or something like that. And then obviously, if it goes into a loss, don't immediately jump ship because sometimes they do go down and then go up, right? But when you see, look, this is just, I took the wrong trade. This is stupid, okay? Get out as early as you can, or wait for it to get to the stop loss, take that stop loss, move on to the next trade, move on to the next trade. But just do it simple. Forget about all these fancy setups and whatnot. Gets to the resistance, take a short. Gets to the support, take a long, okay? Try that. See how it goes for you. It might work, you know? I did an experiment once where someone who doesn't know how to trade would stand here and say, okay, buy, okay, sell. And it was no different to all the complicated stuff. It still worked out the same. Try it out. Take all the complications out and just use your mind. Just use your psychology. Just use your head, okay? And just manage the trades. Manage the trades. Keep the risk the same. Manage the trade, okay? Risk there. Take profit there. If you're going to major profit, move the stop loss up. Follow it up. Try and make as much as you can. Try and make it as much money as you can off that win. You don't have to add to the trades yet. Just let them win. Let them win. Let them win big. And then see how it goes. I know some people will say to me, what are you telling the guy? You know, but don't worry, just try it. It'll help you get the aha moment, for one, which I got many years ago, which is win rates don't make you money, charts can't make you money. It'll help you get that aha moment that the business plan is what makes you money. The strategy is what makes you money. Keeping your risk the same is what makes you money. And making more on your wins is what makes you the money. If I take 18 trades here, 18 trades, and I risk $1,000 per trade on those 18 trades, I'm risking $18,000 on these trades, okay? I lose $9,000. Wow, that's the end of the world. I win the other 9. On average, like I said to you earlier, you'll probably come out at 2 to 1. I'll make $18,000 on the other 9. My maths, that puts me $9,000 in profit. Doesn't matter what the charts did. Doesn't matter what the systems did. Stop worrying about complicated systems. Keep it easy. Keep it stupid easy. Just buy and sell. Then you'll start winning. You'll start feeling it. Look, over time, you'll get a feeling for what's happening around the world and what's happening in the markets and whether you should be buying and selling. But for the time being, just get a feel. Just get a feel for the markets. Just a bit, this is just looking at this now. Where is oh yeah, you see, look at that. This is the UK. So I'm going to keep this one, put it there on the daily. That one at the top that's just the top. It's not even a resistance anymore. The resistance is more like over there. So I'm just going to put that there for now. And that is definitely broken. I'm just going to turn that around over there. Just have a look at this UK trade. Put it back on the H4 and just see what we've got. Okay. See there, simple. Now you got a trade, right? There's a buy, comes up, hits the trend resistance, hits that, probably a sell, come back down. Will it bounce again? Remains to be seen. The smaller this area gets, the more risky the trade gets. You need it to break out or break down for it to give you a decent trade. It's kind of almost like we're breakout, breakdown traders more than anything else, okay? It's just how it goes. This has been so helpful. Yeah, absolute pleasure. I hope it, I'm always glad when it's helpful for someone, that someone's actually getting something out of it. And yeah, well, anything, just ask, you know, I got no problem, just ask. You can ask me in the comments. I try to answer every comment when I can. I can't sometimes get to all of them. What I normally do, if it's like if your first comment there, I'll definitely get to it. But if it's like a whole bunch of replies and things like that, I might miss it in the pile. But I do try to answer every comment. Other than that, email me on newmarketsSX@gmail.com. The email is on my channel. And I'll try and get back to you, but I can't get back to the emails every time either. I'm a bit slow there as well. But your best bet, here's your best bet. Much better than anything else. Make sure you've joined the Telegram channel, which is free, in the description, and ask me on the Telegram channel. And if I don't answer, there's a whole bunch of guys on the Telegram channel that will try and help you with it as well. They'll try and give you some of their advice as well. So join that. That'll help you as well. Okay. It's better than email because I don't get to the emails. Can you repeat the support and resistance, bullish and bearish directions, please? Can you repeat the support and resistance, bullish and bearish directions, please? Sure. Okay. Let me try and... Right. Okay, here we are. Here's support and resistance, right? So what I normally do, go to the day chart like you saw me do there, right? Normally you want 3 touches on any one given line, whether it be a trend line, a resistance, or a support line. But what I do, I'm looking for the top. I'm looking for the top and I'm looking for the bottom of an area. What I'm looking for effectively is liquidity in the market. This is probably a really bad example because this is trending, but it's okay. It's turning around. Now, this has broken structure, and that's why I'm looking at this particular product, okay? It was trending up and the structure broke. I'm just going to draw this in. The structure broke over there, so it's now going to the downside. But what you want is you want a resistance, you want a support, okay? Now, the easiest way to trade these, and I'm just going to go to a better example so that you can see a little bit better of how we trade support and resistance. So there's the resistance, there's the support. I drew this in because it's an area of liquidity. So that just gives you a bit more, you know, it's not a straight line. There's a whole area here where there's liquidity. Liquidity is where there's a support and where there's a resistance. What do I mean by liquidity? Well, this is where the big institutional money tends to turn the price around, because when it reaches that level, there's a lot of money there, there's a lot of money there, there's a lot of money there. And at the bottom, a lot of money there. That was, firstly, it was a resistance. It was money, money, money. It broke and it went up and it shot up. It broke that. So that was a buy. Okay. Now it's come back and fallen all the way back down. Still money here. And it came back up to this level, came back up to this level. So this level is a very, very important level. Now what it's doing is it broke up. It was a buy, came up, created the resistance again, because this level's become important. So that's your resistance. You sell at the resistance. It comes down. It hits this area again. Now what it's done is it's turned this was the resistance area into a support. Swapped it around. So now every time it hits this area, it's taking money there, but as a support, as a buy. What I do is I draw the trend line in the middle. If it breaks the trend line, it breaks the structure and it sends it to the upside. Okay, so if it's going up here, it'll break through that trend and then it's going long and vice versa. Okay, the simple way is if you're on the H4 here, is to look at it and say, if it hits the resistance, sell. If it hits the support, buy. The best way to do that, if it hits the resistance and it sells and there's a red candle, it's a good sell. And if it hits the support and it goes up with a green candle, the green candle closes, then you can buy. Or you can be very cautious. You can wait for it to break through the resistance line, give it a green candle, and buy after the resistance line. Just buy. If you want to keep it really simple, like I say, you can just sell it off the resistance, buy it off the support. No fushbot. If it breaks through, a good idea, and that's why we didn't buy here, is to wait for it to come up and retest. Now at the retest, that failed and went back down again, so you didn't buy it. Had that stopped there, given a green candle and gone to the upside, that would have been a break and retest. It would have been a buy. You could have bought it and gone up. Sometimes you buy here and then it fails, it goes down, it hits stop loss. That's as easy as it gets. Keep it simple, don't overcomplicate it. Okay. Can you repeat the support and resistance bulletin? Why is the video quality not improving when it's set to 720p? I can't help you with YouTube or video stuff. I'm a trader by nature and I make these videos. YouTube is supposed to up the quality in the best way that it can for you when the video goes up. My videos go up in HD or 4K, so I don't know what's going on with your 720p, but my face picture and stuff like that might be not be so great on the live shows, but the actual picture should be fine. It should be 4K. The videos that I put out should definitely be in 4K, so I don't know. I can't help you with that. That's not my thing. This channel is a gem. Rob is a gem. Thanks. Thank you. It's okay. It's clear I'm the same time with live. Do you know what it might be as well, though? It might be sometimes it's the internet. You know, I found that myself from a novice point of view. Just remember, guys, when I'm making these YouTube videos for you, I'm not a pro. I'm a novice. Okay, total novice, an old man making YouTube videos. Amazing, isn't it? Remember, my main game is trading, not this. So you know, I'm trying my best for you. But I've experienced myself that if the internet goes slow for some reason or breaks down or whatever, even on my side perhaps, then the quality might deteriorate for a short period of time. And that can happen. It could even happen on my side. It could happen on your side. And then we're working on internet speed here. And I know that if that drops off, it can give you problems. It's like when you're watching streaming, you're watching football, whatever, and then suddenly it goes a bit hazy. It's just the drop off on the internet. Now the UK 100 is sticking to the trend line, so this is a sign of a potential breakout. UK, look at the UK 100. Okay, so what you've got to watch out for here, right? So the UK 100 is on the day. Let's put it on the H4 so it's a little bit bigger. So suddenly when I put it on the H4, there's quite a decent gap here. So I'm just going to try and bring it in a little bit so it looks a little bit better. Right, there's quite a decent gap here. It's hugging the trend line, but it hasn't done anything. What's actually happening here is you've got your resistance, you've got your support. My scenario here is it's got down to the support, bounced up, so it's a bit of a dead cat bounce. The markets are very negative at the moment, so I'm overall pretty much short. Don't want to take any long trades on any of these indexes as I stand. But if the ship changes and things move around, you would want to take a long trade. If this breaks through the trend resistance, gives you a green candle on the other side up here, and you can take the long trade up there. But if you get the red candle coming down off of that resistance, then it's staying in trend. You can take the short trade down. But bear in mind that your risk to reward is becoming less and less, because you see your risk is becoming more and your reward is becoming less. So this is not a trade that you want to be taking right now. What you want from this is for the price to break below the support. Sorry. And give you a breakdown trade. It's quite hot here in Cape Town as well. You want it to give you a breakdown trade, break through that line, or give you a breakup trade and breakout trade up to there. You don't really want to be taking this trade at the moment because you see this is becoming a triangle and it's becoming a cube. It's getting smaller and smaller and smaller and smaller. That's reducing your reward on the short. So if it breaks out to the long, you've got a decent risk to reward because your reward's up top here at resistance. If it breaks down to the short, you got to wait for it to break down because your reward is just too small. Okay. So yeah, it's not indicating anything until it actually does something. There's nothing wrong with the fact that you opened a short though, because the markets are kind of going that way. So I wouldn't be surprised if they continue on going short as we stand at the moment. I believe they, in all likelihood, probably will. But keep an eye on it. Put your risk in. Don't forget risk. Manage the risk. And then look for your profit and see how you go. See how you go. See how it works out. It's a 50-50. Just follow the trades, manage the trades, and see if they make you some money at the end of the day. Guys, on that note, I'm going to be on my way. I'm going to end the live show. Can you believe it? That's it. We're done for today. We've gone over quite a few topics, and the main topic has been keep it easy, keep it simple, don't go mad, don't overcomplicate, don't put loads of charts up, don't put loads of indicators up, just keep it simple. If you haven't subscribed to my channel, that's the first time you're watching, make sure that you have. If you haven't joined the members area and you don't get Trade of the Day every day, do that as well because it supports the channel, it's good for the channel. Don't forget to have liked this video because that also is great for the channel, because I am, although a trader, trying to grow a YouTube channel for my own personal little boost of, look, I did that. Look at what I did. I can't wait to get one of those little placards or something they give you. That would be great. So I've got my own little achievement to do here, because when I do something, I set out to do something. I set out to do it right. So I'm having fun with that, and I'm enjoying myself doing that. So I like the videos. Let these things grow. Don't forget to like all the videos and make sure you guys are subscribed. Thank you for being here. I hope you enjoyed yourselves. I certainly enjoyed myself. I love making these videos for you guys. I'm having fun. Till the next one, keep well. Cheers. Ciao.